much happening this. Okay, maybe not. Bad joke time. So yeah. Anyway, just want to do a quick update on the week. I think we talked about kind of making this a little bit of a focus on COVID because there's been some interesting effects, if you will, of COVID and as it's impacted real estate and kind of all of our home values and the market in general. So just kind of want to hit on that here quite a bit. And so I've been relegated to the dining room for this one as Jeannie's in the other room working up an offer. So try to give her some peace while I'm out here now. So that said, let's just kind of jump right in with sort of the early updates that we always like to show of kind of the, hey, Jeff, how's the market? So on the Oregon side, the Century Lock lockbox activity. This is every time Jeannie and I unlock a door to show a house to somebody, registers activity here. So week over week, Portland is arguably flat, down slightly, but plugging along. We're still, pretty much at last year's level of activity. So by and large, it's just a normal year in the Portland metro area for activity this time of year. So that's good news for us here. On the Vancouver side, down, about 6%. So they are starting to see a little bit of their slowdown. They too are about at last year's rate. I think when we showed this a week ago, they were kind of slightly behind, but they're in the ballpark of last year, maybe a little bit behind pace. But again, not the big departure that we thought was going to be kind of the crash and burn from COVID of this year. So as we talk about COVID, all the focus right now is what's the impact that COVID has had on real estate and kind of the state of the market and so forth. So we talked a lot about inventory in the past couple of weeks, and prices are going crazy. You know me, it's supply, demand. That's what rules the day. So let's as we talk about demand and what we're happening. I showed some stats a few weeks ago now when September stats first came out. And I was focused mostly on the 1.1 months of inventory, basically showing there's just no homes available for sale. What we didn't talk about that probably warranted a conversation is that if you look at year to date, Portland area, we've seen 23,000 sales so far this year on a year to date basis. Compare that to last year, 22,000. The market's up. So there is no slowing of the market. We're off pace from COVID. We're beating last year, even with an arguably a 2-month hole that hit us kind of back, kind of late March into May timeframe for COVID sales. So that's been a little bit of the surprise factor that we've seen is not only has COVID really not had an impact, it's exacerbated, it's fueled the market. So that's what I want to talk about a little bit today is just sort of how COVID is impacting us, what we're seeing, and there is a little bit of a surprise plot twist at the end of kind of the good news and sort of as real estate has become the silver lining in a horrible year. Let's talk about who's really driving that, who's saving the day for all of us, and that's going to be the funny one. So anyway, let's just kind of jump in. There's a great article that came out the other day, kind of this COVID-19 causing all these unexpected impacts, which I don't think has surprised anybody based off what we've seen. So kind of what they talk about is the biggest thing is sort of what they're calling life uncertainty. So I guess Zillow put out a survey or a study basically saying that there's about 34% of potential home sellers just aren't selling because of COVID. That they're sitting on the sidelines. They arguably probably don't want people coming through their homes. So home activity, listing activity is down a third. So let's put that in perspective. So we went back September with 1.1 months of inventory in Portland metro area. So let's just say 34% more people had their home actively listed for sale in the month of September. Instead of 1.1 months of inventory based off the same level of sales, we'd have 1.5 months of inventory. It's still less than half of the bare minimum to be called a balanced market. So COVID's not the answer, right? Yes, it hurts that we don't have more people selling their homes. It's making the supply challenge a little bit more constrained. I think this is a bigger issue than just people are scared by COVID and the impact. So I think if you factor in on top of that, people who have had job disruptions for one or both people, if they married couples in the home or things along those lines, you maybe tick up 1.8. It's still we just don't have enough houses in the Portland metro area. And again, I think it goes back to the Great Recession and the lack of builders who survived that, available land, hear me on and on talking about this. So I think we have a long-term systemic problem with inventory in Portland. I don't see that going away. So then the other thing that's talking about the other unexpected impact of COVID now is, what are we all doing? I mean, we've been doing this for a long time, but we're all working from home, or a lot of us are working from home, or at least splitting time. Some of us are back in offices. Probably some of us never left the office. So 2/3 of people are working remotely during this, or they're saying that those who are, 2/3 are saying that they totally want to continue and somewhat expect to continue to work from home long term. The challenge is right now their employers are still trying to figure out what is the policy for going forward. Will it be, if you're working from home and it's working out and everybody works from home? Is it a hybrid approach, a split your time? People are waiting to figure out when or if they will ever return to an office environment. So some of that's going to be work protocol. Some of that, honestly, would be people like me in my past life, my old CFO role, trying to figure out, is productivity the same? How much can we save from a kind of commercial office rent capacity? People are still working through that. So other things that kind of got hit up in this article, talking about 40% of homeowners are considering selling in the next 3 years. So 40% of the market in the next 3 years. But they're saying that the only thing that's really holding them back is they feel like if they wait, they're going to get a better price. And they're probably right. There's nothing that's going to let home prices come down. I think mortgage rates are going to stay good for quite a while. Again, that lack of supply is going to be good. So yeah, if you wait, supply demand says your price will keep rising. You'll get more when you sell. The challenge to that logic then is when you are ready, you sell for more money. Now you're ready to buy your next house. Guess what also costs more money? So in that sense, is there logic to timing the market like that of, I want to wait to sell for higher before I make my move? And I would argue, unless you are specifically moving down in the market, no. And even if you're moving down, it's probably more of a status quo, right? Because the high tides rise all ships. And if nothing else, those lower price points tend to escalate at a higher property appreciation rate than higher price homes. So you may even be hurting yourself if you do that. And secondly, they kind of go on to say that there really is no right time because like we just talked about, also with the mortgage rates, there is no guarantee that they're going to stay low. Depending on what happens tomorrow or all week or however long it takes to get tomorrow unsorted, whoever wins, could have meaningful impact on markets and all the driving forces. Or you still have the COVID wild card and kind of the dark winter we keep being warned about. Rates could, they could move dramatically. They may not. We don't know. But so that there's risk there, because it's the unknown volatility. That said, they could get better too. So no crystal balls here. But then, so then it goes on to say that 30% of all homeowners want to make a move. They're unconcerned about the rates or anything else or prices. For them, it's more of a concern of, if I sell, what am I going to buy? And I tell you, we hear this one regularly from our clients who say, I want to make a move, but here's my concern. And you just need the right strategy to figure out how to help them bridge that gap, kind of bridge that divide from selling home A to purchase home B, and how do you make that all work? It's absolutely possible. It is a bit of a stressful event, but it does certainly happen for sure. So, and kind of like what we talked about, 4 out of 10 Americans, they specifically want to buy a house because of the pandemic. And I can tell you, having done a number of open houses over the past few weeks, I have this conversation with people regularly. I did an open house up in Bonnie Slope area yesterday. Had about 10 people come through, and 2 or 3 times I specifically had conversations about why they're looking to buy a home. And people have said, I need a better home office. I need more bedrooms because we got family members staying with us longer. I need a better backyard. I want to get away. I need space. COVID is actually driving demand where people recognize there's higher sense of value to the home than what I think people recognized or appreciated before. So this is really, really, really driving an increase in sales. So that said, this kind of, for some people, starts to feel like 2006 all over again, like it's heightened demand. We're, gotta have a house. Prices are just going to the moon, kind of thing. So people start talking about, is this a bubble? Is it, here we go again? Right? Are we setting ourselves up for another disaster? And I can tell you unequivocally, no. We don't have a broken financial market. We don't have loose, cheap, easy credit. It's not, you don't have the ninja loans of no income, no job, but it is getting talked about. So there's an economist guy, Logan. I never tried Logan's last name. He's an economist for the housing sector, and he talks about this actively of what he calls the bubble boys, people who keep screaming, it's a bubble, and that bubble bursting is not happening, nor is there any formation of a burst coming. And the big thing he talks about is there's intrinsically what he calls this sticky demand. It's based off demographics. And you have this notion of what he kind of calls these replacement buyers. I mean, we've got long-term systemic people looking for homes, and he's projecting probably at least through 2024, we have a very healthy housing market coming up. That said, we still have that supply side issue, but from a demand standpoint, absolutely talks about, no, there is a solid built-in basis of demand that's out there. We're going to come back to that. So that's your surprise twist here coming up. So in terms of who's driving it. Now, we also talked about, when I talk about wanting to do this thing today, we're going to talk about kind of, more forecast projections, right? Because I think it just is worth talking about in terms of home values and kind of what to expect. So Lynn Kiefer is he's an economist. I can't tell you who he works with, but if you're like me and you data nerd out kind of thing, Lynn's a fantastic guy on Twitter to follow. So he put together his sort of kind of the housing outlook and housing and mortgage, just trying to figure out where do we think things are going to be going. And what he does is he does a really good job he's a data visualist, right? So as he's talking about where we're at, do we have a supply issue? Is it demand side? Is it so on and so forth? He breaks it down into what I would kind of call 3 key slides that he shares, and I've shared similar things, but I'm going to share his exact ones. To put this back into perspective, this going back to 2006 on this slide, just looking at your mortgage rate trends. Obviously, I mean, we are as low as we've ever been at this point, kind of all things considered. So that's what's driving a significant amount of demand. It is basically free money for a mortgage at this point. When you're talking 2.5% to 3%, it's comical. It just doesn't, it doesn't cost anything to buy a house anymore. So we've got your cost of borrowing is way down. Meanwhile, now because of and this, if we kind of show sort of the long-term inverse relationships of what happened during the Great Recession, builders stopped building, sales kind of kept going. Certainly, the sales have recovered. So then, if you look at sort of that 2006 to now, 2006 to 8 timeframe, you see the inventory kind of sky high, and this on a national basis. And I look at where we're at now, and we're all kind of bumping around, a month or so of inventory. There are simply not enough homes, and this is a United States issue. This is not just Portland. It's not just Oregon. We're not special. Most housing markets in the country are seeing housing deficits, right? The demand is high. People want houses. COVID is just exacerbating what was already there. So we don't have enough housing going on. So what's the last piece that we can fix then? If the demand is there, let's talk about the supply. Here's your U.S. single-family home construction starts, again, going back to 2006. So if you look at the 2006 timeframe, the market was on fire. Prices were sky high. People were going crazy. It was the Dutch tulip effect on houses, right? That was certainly the bubble. And they're building homes faster than you can imagine. And then the bubble burst, 2007, 2008, and look at the graph. I can't point to the graphs, you can't see, but if you kind of go to the third year column, your construction activity just dies. And then if you look back then for over the past 14 years, we're not building anywhere near where we were leading up to kind of the bursting of the bubble. So anything that we had in terms of excess inventory back then, with a baseline demand that's always going to happen, with new supply side tanking, your inventory drops. Now, since then, we still haven't built at the level we need to be building, so thus we never get out of this hole of not having enough inventory. So that goes back to 2006, so it skews it. So now I'm going to go back to the Logan guy. He does the same kind of look, and he went way back. So this one goes back to the year 2000. So let's go back 20 years, looking at the new construction chart starts. If you look at where we're at now, all the way to kind of the far right side, 2019, 2020. We're at a level that if you look back in time, even before the run-up of the Great Recession, of the big bubble activity. Even before all that, 2000, 2001, 2002, we were still building more homes back then than we're building now. Meanwhile, the population has grown, things have exploded. This demand has heightened. And now it gets worse. This is where I keep going back now to the local markets. On the Portland basis, we have the urban growth boundary around here. We have nowhere to build, right? We're doing a little bit in Wilsonville. We're doing a little bit in South Hillsborough. Bethany area always expands, just kind of little bits here and there. And I can assure you that's probably going to run out of room here pretty soon. There's nowhere to build homes. So I don't see this getting better in Portland anytime soon, because I'm just a data-driven guy, and there's nothing there that shows me on a supply-demand basis what gets better. So let's wrap up now with kind of going back to Lynn Kiefer. He talks about there's three things that are driving the spectacular housing market. And at the end of the day, right, you hear me, supply versus demand. In this case, it's the demand in lack of, or in the face of a shortage of supply. So what's driving it? Low mortgage rates. That's one of them. We know that, right? Number two, yeah, there's high levels of unemployment, but as Lynn also points out, and we've talked about this on these videos for a while, homeowners typically have not been hit to the same magnitude by coronavirus impacts as those who are typically in the renter market. So yeah, you've had some homeowners having to go through forbearance or having to sell their homes or whatever the case may be, but not in significant numbers, enough to move the needle of what we're seeing on a national basis. And lastly, he calls out is the demographic forces, right? So go back, Logan talked about kind of the sticky demand and replacement buyers. Lynn's just kind of calling it the demographic forces. And one key group gets called out in terms of who's really driving the demand right now. And it's a group who's basically said, I want a house. I recognize the value of owning a home. I don't want to be in an apartment. I don't want to be in a condo. I don't want a dense area. I want suburbia. I want neighbors. I want that American dream of the house and so forth. And that group, we have to stop giving them a hard time. It's the millennials. It's going to be a bigger population group than what we've seen for quite a long time. They're just entering the market. So it's fun to kind of rip on the millennials and their avocado toast, and that's all they do, and they're worthless, and whatever all the stupid jokes are. The reality is, if you own a house and your property value is building rapidly and you're building real wealth for your family, you need to thank a millennial, because they're driving this for us. They're keeping us afloat. And based off what I'm seeing in the market, it's going to be happening for quite a long time. So bottom line, if you're looking to time the market or wait for things to get better or easier, I don't see it happening. So if you're ready to have that conversation ahead of time then and figure out how to solve whatever your challenge or desires are, hey, give us a call. Let's talk. That's all we got. So a little shorter than last time. Thanks for tuning in. And all right, have a good week and go vote. Thanks. Bye.